Hey, so I couldn't wait. I didn't even go anywhere. I just recorded the last video and jumped right into this one because I know on this channel I've already talked about how your P&L can lie to you. I've already talked about how you can be profitable on paper and broke in the bank. We've already kind of eased into these cash flow like lessons, but I just came off the lesson about cash flow. I'm saying lesson, but conversation, whatever you want to call it. But I just came off the talk about cash flow reserves and cash flow projections. And this one is natural because there are only a few reasons why people like really struggle with cash flow. I shouldn't say like these are the only ones, but there are like some main ones in small business, which my audience is 9 out of 10 times going to be small business owners who are trying to get like good information. So I want to make sure that I piggyback right off this. So if everything looks the same, I know I got on the same shirt in the same dark room in the middle of the day with the same thing. The paint is still wet on the wall and it's taped. I'm sure this looks the same. So that explains that. But let me get into why you're here. Because late payments or outstanding invoices is probably like one of the biggest cash flow killers out here. And before I dive in, I want to just go ahead and stop the whole energy by telling you I'm Albert or Albert the CPA. Follow me on Instagram, subscribe here, or Albert C. Hurston Jr., CPA, owner, founder, CEO of Right Choice Accounting Solutions, where we help our practices, agencies, and firms understand what the numbers are truly saying about their business. In other words, we're full service, one stop shop accounting and tax. Everything from bookkeeping to fractional CFO to tax prep and tax strategy. I run this amazing company with my amazing wife, Lauren, and our amazing team. So, with that said, I would like to talk about some of the things that actually real life hurt cash flow. I'm gonna anchor this one into those late payments, those invoices, but there are a couple of things, and I wrote them down just to make sure that I gave you the top 5 that I could think of off the top of my head that I see in the day to day. Debt payments. Debt payments is number one because people never think about this as they're considering cash flow. People typically stop right at the P&L, and as you know or should know, debt payments do not affect your P&L. Like when you're spending the money on your credit cards and stuff like that, that still hits your P&L. But when you're actually paying your credit card, when you're paying your loans, when you're doing this stuff isn't seen on your P&L if it's being done right. Because like some bookkeepers just be doing all kind of stuff, but that's a different story for a different day. But debt payments don't hit your P&L, but they definitely hit your cash flow. Owner draws. I always struggle with saying like the biggest cash flow killer isn't owner's draws, but I don't want to talk as if all small business owners are a little bit irresponsible with their money. It is a big one for a lot, especially a lot of the ones that we see, but it's not the top one, believe it or not. It's a big one, especially for like the online coaching type, the online marketing type. Like they struggle a lot with understanding the difference between their business money and their money. But we're here to help them too, so I'm not gonna pile on there. But owner draws, because owner draws are another one. They don't hit the P&L, but as you know, they come right out of cash. And if you're not an S corp on salary, those owner draws can literally kill your operating cash. The third one is buying equipment and other like capital expenditures. I'm not going to do a long drawn out accounting explanation of what capital expenditures are, but just think equipments like buildings and stuff like that. These are things that are coming directly out of cash and they're sitting on your balance sheet. The cash is going down, nothing hits the P&L. So if you're one of the typical small business owners that only get a P&L, practically only get a P&L because you want to know how much revenue and profit and then you want to be good for taxes, like that balance sheet shows you a lot more, and more specifically the statement of cash flows and the balance sheet shows you a lot more about what's actually going on with cash, because cash ain't on the P&L, it's actually on your balance sheet. So understanding the other stuff on the balance sheet, super helpful. Since I yapped a little bit, I'm going to go ahead and run down the list so far. We got debt payments, we got owner draws, and we got equipment or other capital expenditures. Number 4, inventory sitting on shelves. Like a lot of people have products and they buy inventory, and as you know, that's cash that's gone out, but it hasn't sold yet. So the cash is gone, the product is still sitting there, but there's nothing on the P&L to actually show you that cash has been gone. And this is why we say the P&L can lie to you, especially about your cash. P&L looks you right in your face and tells you a plain out story. And now to the one that we actually are here to talk about is AR. AR is accounts receivable, it's outstanding invoices, it's money that is owed to you that has not yet been paid. This is your outstanding accounts receivable. And for a lot of people, this is the one that actually really hurts them because AR hits a little bit different, right? Because the way AR works in your books, again, this is with the under the scope. Like, I know how it is. Most people, if they look at any of their financials, they looking at that P&L. And the reason why AR really hurts is because the moment you send that invoice, revenue is recorded. So if you're operating based on revenue and profit without the scope of cash flow, you already know what that's an issue because it's telling you you've made revenue and you have not received that cash. And that's why it's such a huge cash flow problem, because if you're not actually managing AR, managing like the collection of AR, following up on late payments, making sure that people are getting reminders about payments, all of this stuff, all of those things are really, really, really hitting cash flow. And it's affecting cash flow in a major way. A lot of people try to get around it by actually like billing up front, but a lot of small, savvy business owners, they're not going to pay you up front. They're not going to pay you ahead of getting something. So, like most people, most service providers really do end up kind of taking on that risk, because with AR, it's good because the people owe you the money. And it's just a timing thing, but cash flow timing is crazy. And that's why I had to jump right into this video off the last video, because we talked about reserves and we talked about projections. And this one, AR, cash flow timing, goes so heavily into it because you don't know exactly when you're going to get your cash. So that's why these two videos go hand in hand. That's why I didn't change clothes. That's why I didn't pass go collect $200, didn't do anything. Just stop that one and start talking about this one, because it flows right into it, right? Because you need to understand your cash to stay in business. And I don't know why this isn't like the main thing. We love talking about profit. We love talking about revenue. We need to make cash flow the king, because as you know, cash is the king. But it don't need to keep just being the king and cute quotes and, books and stuff like that. It needs to be how we run our business. We need to run our business based on the movement of cash. So one slow month of AR can start compounding, because a lot of times when your AR is coming in slow, if you don't have the proper reserves or the proper projections, that's going to push back some of your bills. And then once it comes in, it's late. That means you were late on your bills, and it just starts to compound on you. It just starts to double and triple, and hopefully you don't end up paying late fees and penalties, or like factoring out your AR, because once you start factoring AR, you just jumped into like almost a payday loan scenario, because now you charging people $20,000, but because they're not paying quick enough, you're giving a factoring company a portion of that, so you never get the $20,000. But all the projections and the plan and the team and all that is based on and it just becomes an issue. So you see how this stuff just grows into like more and more huge issues. I don't know if you can see the paint on my hands, but I'm painting. I'm a country Alabama boy, so I'm doing everything. It just waved in front of my face, so I don't want to distract you with the paint. I guess I'm distracting you with the paint by talking about it. Anyways, look over me. I'm sure I got ADHD, undiagnosed. Anywho, AR isn't liquid unless you have like really solid AR and collection processes, and you are locked in on like your average AR collection time. There are plenty of metrics. I won't get into them because that just complicates things. But if you're working with the right accountants, your accountants will get into like your AR turn and that sort of thing to let you know about how often you collect on your AR, and they can add that right into that cash flow projection, so you know how much cash or about how much cash you should have at any given moment. Because if we running and growing and scaling the business, the only way we can scale it is by the numbers and understanding that cash. And I won't talk your head off any further. I'm gonna go ahead and close it out, because the P&L just really lies about like the real nature of what you're doing. Now, there's some really helpful information on the P&L, so I'm not just trying to play like it's not one of the most important things. It's just not the complete picture, because out of context, it's a liar. It can make things look a lot better or a lot worse than it actually is. Because on the flip side, the P&L can tell you that you're doing terribly, and you can have $500,000 in the bank, so you are literally over investing and over spending because you got the cash reserve and the buffer to do so. So all of this stuff needs to be contextualized. But back to what I was saying, the P&L can lie. You need to make sure that you understand cash flow, and it's going to start with understanding your cash reserves, which is going to be making sure you have a couple of months of reserve on hand at all times to make sure you're good as you go through that business roller coaster, the ups and downs of it. Just to reiterate, since maybe you didn't see the last video, you want to make sure you have a simple cash projection so you can kind of see what cash should be like as you go into the future, or how cash is moving as you move through the future. And you want to make sure that these things that the blind spots that I hit, the debt payment, the owner draws, the equipment and capital expenditures, the inventory, and of course the AR aren't like killing your cash flow, because these really can hurt you if you're not aware of what they are and how you manage them. And that's it, man. I won't talk your head off. I know I talk a lot. I feel good today. Had one of these things from Starbucks, so my energy's up. So I don't know how many videos I'm gonna shoot. Anywho, man, I have this book here. It's the Business Owner Financial Playbook, and I'm not gonna lie, I'm typically hard on myself about stuff, but I'm very proud of this because I wrote like a 300-page textbook built specifically for CEOs, and I was able to chop that down into a book that's under 100 pages that actually in real life tells you about your numbers, tells you how to find them, tells you what numbers you need to find, tells you how to hold your actual accountants accountable. It really, really, really does a good job of helping you to stop guessing and start leading your business by the numbers. And I won't lie, I'm proud of it. And it's hard for me to say like I'm proud of some work, because I typically I think I'm a little bit of a perfectionist, so I'm always like redoing and redoing. But this is good stuff. And of course, if you're someone who needs like support with your actual day-to-day accounting, just make the right choice. Don't complicate it. Well, right here, you see we know what we're talking about. Don't complicate it. And always, as always, if you need to see more, even if you don't need to see more, go follow me on Instagram at AlbertTheCPA. We're posting all the time over there. You'll see the behind the scenes of the company. You'll get a real vibe and feel for how we do this stuff. So AlbertTheCPA on Instagram. Don't forget to like, comment, and subscribe here. And if you would like, I always forget about the show. So we do have the Real Bottom Line with CPA. It's a weekly show where we talk about current events by the numbers. And the last segment each week is Ask Albert the CPA. So if you have a business question that you would like to have answered by a real Forbes featured CPA, you can email us at any time at askalbertthecpa@gmail.com, and you may get your question answered live on the show. And that is it. Again, like, comment, subscribe. Let us know if you need anything from us. info@rightchoicefirm.com. And that's it. I'll be looking forward to talking with you soon. Have a good one.